Earnings call transcript, Amgen Q1 2026 beats EPS forecast, stock dips. That single number resets the market's playbook. The key question is not what happened, but what changes next for operators and users. We will map trigger, incentive shift, and downstream impact before the close. Revenue beat, pipeline delivered, and management guided higher for the full year. So why did the stock drop immediately after? This is the exact moment when Wall Street's obsession with the narrative overshadows the actual numbers. Let's start with what happened. Q1 2026 earnings came in above consensus. EPS beat estimates. The top line performed. On any traditional scorecard, this is a win. But here's the thing: markets don't price in past performance. They price in the future. And that's where Amgen's call revealed something the headline didn't capture. Management walked through the pipeline. Several key assets are progressing. But when the CFO broke down the guidance range and started talking about the shape of growth going forward, something shifted in the room. It wasn't that growth is stopping. It's that the rate of acceleration investors were pricing in may have already peaked. The market had built in assumptions about blockbuster launches in 2026 and 2027. The call didn't kill those assumptions. But it also didn't accelerate them. It just confirmed them. Now here's where this gets important for your portfolio. When a large-cap biotech reports numbers that are asterisk good but not asterisk exceptional in a sector that's been running hot, the risk-reward flips. Amgen's trading at a certain valuation multiple that assumes a certain growth rate. That multiple was justified when investors believed Amgen could deliver surprise upside. But if the call signals that upside is already baked in, if management is saying here's what we'll deliver, and we're confident in it, but don't expect us to beat by 30% again, then the multiple compresses. This is classic momentum correction. Biotech as a sector has been climbing hard on AI drug discovery promises, GLP-1 hype, and aging population thesis. Amgen is caught in that wave. But when you're a $300 billion company with mature franchises, even great execution can feel like a disappointment relative to expectations. Let's talk about what actually matters for the next few days. Watch the institutional flow. If hedge funds and mutual funds start rotating out of large-cap biotech and into smaller names with more binary catalysts, that's a signal the sector is repricing. Second, monitor the guidance range. If other large-cap pharma companies report this quarter and guide conservatively, the sell-off spreads. If they surprise on the upside, Amgen becomes a buying opportunity. Third, and this is critical for long-term investors, look at the pipeline detail. Amgen's strength is in its clinical assets. If the call transcript shows that key phase 3 programs are on track and have clear value, that's worth $20 billion in future optionality. The stock drop might be noise. Or it might be the market saying we've already factored in the wins. Show us something new. Here's the contrarian angle nobody's talking about yet. Large pharma stocks don't crash on earnings beats without a structural reason. The reason is usually one of three things: guidance was weak, the call revealed execution risk, or the valuation was already at peak optimism. Amgen's guidance wasn't weak. Execution seems fine. So the market is betting that at these prices, the risk-reward is worse than it was a week ago. That's not a fundamental problem with Amgen. That's a sign the stock was overvalued relative to what management can deliver. And for investors who've been holding for years, that's actually useful information. For newer investors, this is a teaching moment. Beating earnings and having your stock fall is not rare. It's what happens when the market has already priced in perfection. The key is separating the noise from the signal. The signal here is that Amgen is executing well but not surprising. The noise is the one-day dump. Over the next 72 hours, watch three things. First, does the stock find support above the 50-day moving average? If it does, this is just profit taking. If it doesn't, there's more institutional rotation coming. Second, does Amgen's implied volatility spike? If 4 compresses, the market thinks this is a buying opportunity. If it stays elevated, there's uncertainty about the fundamental outlook. Third, watch the sector. If other large-cap biotech names hold support while Amgen falls further, it signals the sell-off is Amgen-specific and likely temporary. The real story here isn't that Amgen missed. It's that the market is recalibrating expectations. For earnings observers and portfolio managers, this is your signal to dig deeper into the transcript. Look at the specific guidance for each franchise. Check if there are any headwinds management downplayed. And most importantly, ask yourself if the stock is cheaper now because it's a better value, or cheaper because the risk profile has shifted. That distinction will determine your next move. Follow Atlas Signal for real-time earnings breakdowns and market intelligence. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.